Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on October 16th, 2014. Some more fireworks today. We're going to take a look and see if we can make a little sense out of it after I remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you got to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out on a 5-minute chart, we've been watching the action that had, for the most part, been taking place between these two parallel red lines that are fairly narrow. You can see that on the 14th we got over this a little bit, but not by a technically significant margin. Then on the 15th we actually get just essentially okay, it looks like a long candle, and if you looked at the S&P, you would see that it moved down rapidly. But in effect, that's really a gap, because as the stocks come online that make up the S&P, as the first trades are reported, the S&P is then calculated, and until each stock reports, they have the closing price from the day before. So for all practical purposes, the S&P had a big gap down on the 15th. Recovered a bit, recovered a bit, sold off even deeper. Both the gap and the low yesterday were underneath this trend line. And remember, yesterday we talked about how descending trend lines, when they are broken to the downside, you cannot count on them to really act as resistance. And you can see yesterday we came right back up through 1, 2, 3 different trend lines that broke down, but they were all descending, so they don't have the same function as if we had broken an ascending support line. So this is a support line, this is a support line, this is a support line. All three of these are descending, so they tend to not be reliable as resistance when back tested, and you can see that. Today we very briefly were underneath both this line and this one. Any problem? No problem whatsoever. We went underneath them, got back on top of them, underneath them again, back on top of them. Today we did get significantly over this descending resistance line, which may be technically significant. And the reason I say it may be is because we know this, and we've talked about it before. Trend lines are broken for one of two reasons: either to reverse or to consolidate and then continue the same trend. So at times I've talked about, getting over this resistance line will be the first sign that we may be reversing. Well, it probably is, but I don't want to be quite that dogmatic right now, and I'm going to tell you why in just a second. But first, let's look at a 3-minute chart. This is what we're looking at for the action for the past 2 days. Now, there's a little bit of a schizoid look to what took place from yesterday through today, and I'll tell you why I say that. First thing is, it looked like we might be having sort of an inverted head and shoulders, with the left shoulder being that gap down, recovery, head, back up to about the same level, shoulder, another little shoulder, then we got over that level briefly. If you are an astute observer, you may also be looking at the fact that we essentially have three lows from midday yesterday through today that line up absolutely perfectly. Here, here, and here. You may also notice that our highs don't line up perfectly. Another thing you might notice is that if we ignore this high and just go with this one right here and the last two, and I'm not saying that's the way we should definitely go, but if you do that, then you can see how I might be concerned that this is a rising wedge coming out of that fairly swift downward move. That is one possibility. If that is the truth, and if that's the way it plays out, then if this lower line breaks, then we are in all likelihood going to come back down and at least back test this line now that we are technically significantly above it. If you look at where we closed, 1861, and where that line is at about 1833, that is more than 1% above it. So this is a technically important move over this line. This period here was not. This period here was not. Once we tagged this right here, we were an important amount over this line. Okay, so here's a possibility. Downward motion, consolidation in the form of a rising wedge, which would break down, leading us to a lower back test of this broken resistance line. That is a distinct possibility. You will also notice, if you are an astute observer, that where we set our high today was almost exactly, if not exactly, at where we gapped down at the open yesterday. So, I'm not a believer in gaps having to be filled. I'm just not. But when they are filled, they tend to produce either support or resistance. Okay? So 1876, when we hit that today, I believe that is why we started to sell off a little bit, because we saw some gap resistance. Why? Well, if you're just trading the S&P or SPY, you woke up yesterday and the position that you went to bed with at 1876 essentially opened at 1830 something, 1838, or at least it got there in short order. It did not quite get back up to your 1836 that you had at the end of the day on the 14th, and it ended up going down to 1821. Today, you had a chance to get out even, if that's what you chose to do. That is why when we hit this level right here, we started to sell off a little bit. So, it's possible that this is a rising wedge, that this is some gap resistance that is sufficient to send us back down for another test on this line right here. That's a very distinct possibility. So I'm going to keep this line on the chart. However, I'm going to erase this one. And the reason is because there is another possibility. And that other possibility is that we have essentially we do have an inverted head and shoulders pattern. It's just working out how it's going to break out over this line because it's still gap resistance. So, in either case, I believe we still end up making a decent rally at some point to get back over 1900. The question is essentially, do we break out over this neckline right now or tomorrow, or yeah, it would have to be tomorrow, because by what time? By about 11:18 tomorrow morning, these two lines converge. So we are either over this neckline or we are under this support line. By 11:18, we cannot be under this and above this any longer. So that'll be interesting to watch. set your watches, 11:18. If we get over this line, then we would have a target from this pattern, which you could call an inverted head and shoulders pattern. You could also call it an ascending triangle. Okay, we would have a target of roughly 1918, which would bring us back up to a back test really of that long-term support line, which is blue, or possibly even this green line, which is the broken trend line from the bottom of our consolidation that took place between these two lines right here. So you can kind of see where unfortunately this chart has a couple different interpretations. And I'll remind you too that we still have the potential of this double top pattern, which if we look at it on a 2-hour chart, here's the first top, here's the second top, and if this is the case, we still have potentially a move to right about 1800 as a result of that double top. I mentioned that there is an interpretation of that pattern. I mentioned it in yesterday's video that pretty much got met with the 1820-ish low yesterday. Okay, so that is a possibility. It really depends upon how you measure the height of that pattern. If you go for the midpoint where the pattern is in the middle of it, then we met that target. If you go for the very highest point on the second peak, then we have not. So, all of this to say, and I've talked for way too long, I would say for tomorrow, watch this line and this line. Additionally, if we get over 1876, then we're through that gap resistance and likely heading back up to over 1900. If we break this line, then we are almost certainly setting up a back test of this red line right here, which could take us down really for the formation of potentially even a double bottom. Hate to say it, it's ambiguous, but I gotta point it out. I feel, guys, that my job is to find these trend lines and point them out. My job is not to tell you which way it's gonna go. You need to make up your own mind. For someone who's a day trader, if this line breaks, they might say, I'm trading that, and then I'm out in 30 minutes. For someone who's a swing trader, and you've already bought down here at 1821, you might be thinking, you know, I sit that out. I don't bother with that little move because I'm looking for something over 1900. Or if you're a long-term investor, you're doing something else completely different anyway. So you need to factor these trend lines into your own investment strategy and your own trading style. I'm just pointing out what I see in the chart. Resistance here, support here. By 11:18 tomorrow, we are either setting up for a move over 1900 or we are setting up for a move probably to set a lower low in at least the 18 teens. So guys, there you have it. Thanks for watching. Thanks for your support. Take care.